Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. Happy Wednesday to you. We're going to get started with our morning analysis. Okay, so and welcome back. Let me think about really quick what I wanted to say. Okay, so for those of you that are along the cable, let me talk about this for a second. We can actually start here. I don't mind if we do that. So yesterday I sent out a tweet, and you guys might have seen my tweet. I'm gonna let me delete this stuff because I was actually looking I was looking at how I'm going to add to my long position. But so yesterday I sent out I put out a tweet, and I was talking to a buddy of mine. Big trader friend of mine, who we were talking about, the pound dollar. And so we have this inverse head and shoulder pattern here, right? This one right here. This is the big one that I'm playing. And I knew that we were approaching this 618 retracement. We were in Asian trade too, and I'm like, you know what? They're gonna pull this damn thing down to the 618 retracement, which they did. Okay. They're going to pull this one down to the 618 retrace, which we came. I want to say we came within just a couple of pips of it, and I'm like, this employment data in the UK, if it comes in strong, which it did, by the way, if it comes in strong, you're going to catch everybody short, because what happened is you got a lot of traders yesterday. I'll just keep it right here. A lot of traders yesterday were looking at this. Now, we had this big discussion on the Lunch Money webinar yesterday about how a head and shoulder pattern is not a continuation pattern. Okay? It's not a continuation pattern. What it is it is and this would be a continuation, right? Why is that a continuation pattern? Because the trend's down. Yeah, the trend is down. Trend's down. Head and shoulder patterns, by definition, are reversal patterns. So if you're in a downtrend and you see something like this set up, I'm actually looking at it more as a possible reversal pattern to go higher. And so I'm sitting here going, I was sitting here long the cable. And by the way, my cost average was at 131, 131 like 30 right now. It's 131.30. But I figured that we even on a weaker employment number, we would have probably bounced anyway. We had strong inflation data yesterday, and we had now that we have stronger employment data, we're actually breaking higher. But anybody that was looking for a head and shoulder pattern to move lower, I was trying to point out, and obviously I'll tell you guys on Twitter, I'm a little bit more. Well, I just don't I don't give everybody the information. You know what I mean? Because look, if you want the information that I'm going to give you, you're going to have to sit here on this webinar and listen to me. You know what I mean? You guys that are listening in right now are entitled to the information that I want to give. People on Twitter, I'm only going to give them about 20-25% of the information. Why? Because if they're not going to take the time to come listen to my webinar, after I take the time to put forth the effort to put out the analysis for them, why should I give them the full picture, right? Yeah, I mean, so those of you that are here that are listening in, I'm willing to spill the beans a little bit. And so what I was telling everybody yesterday afternoon is, don't get caught short here, because this is actually a bigger inverted head and shoulder pattern that if I'm right. And I don't know if I will be right. Like Paul said, if we make it up to 140 on an inverted head and shoulder pattern, like 140, 142, it's hard to really imagine that with the cable right now, but you never know. I mean, there's a lot of people that are saying that Brexit's not going to be as big of a deal as everybody thought. Yeah, maybe that story catches hold a little bit. I mean, you have the UK markets that are looking better right now. the global equity market pictures that are looking better. I mean, perhaps the pound, does actually start a recovery. But regardless, there's going to be a lot of people, and there were a lot of people that were caught short the cable, okay, overnight because they were, shorting into this, and I thought that was a really big mistake. Right now, what do you do with the pound now? In my opinion, the cable, you want to be able to buy it now on this dip back below or back to this trend line support if you can get it. All right. Now, if you look more intraday, the 38% retracement comes in at 50, and which I think is possible right here. Okay. 38% retracement. A 50% retracement will take us down to 131.30. A 618 will take us all the way down to 131.15. If you guys get an opportunity to buy the cable down here, that's where you want to be on the long side. Obviously, the 618 retracements are holding well. So any dip like this, you'd want to look for longs. So that goes down to 131.15. Oh crap, I got to ask you guys something. Hold on, let me just finish up with the cable, and then that's going to be really good support. Whoops, not 8. There, okay. No, damn it. Yeah, that's right. Okay. Resistance, let's figure out where this is at, because we stopped here for a reason at 132, and I don't know, maybe it was just a round number. There's a 50% retracement there. Might want to give it a little bit higher than that. This 132.20 is the 618, and this previous support here comes through right here, right? So 132.20 will be resistance. Anyway, that'll be resistance. Not great resistance, but look, we're still in a bearish trend, and I don't want to take away the fact that we aren't in a bearish trend, because we are, frankly. As long as we're below 135, it's a bearish trend. I may be trading long, the same story I gave you yesterday. I'll say it again. I may be trading long the pound right now. I know it's counter trend, so I'm not super aggressive, but I am trying to play a counter trend trade here. All right, and I'm very well aware that it is a bearish trend. Hey, I got to ask you guys a question. For those of you that, is there anybody out there, and this is a Forex analytics question, it's just because we're having a development issue. Is there anybody out there that has had an issue paying with PayPal? I know there's a couple. If you've had an issue paying with PayPal on Forex analytics, it seems like a sporadic issue. And by the way, silver's hitting new lows. Silver's getting crushed right now. Gold's hitting new lows too. Watch these two here. But if anybody's having an issue paying with PayPal, please let me know with Forex Analytics. This, for those of you guys that don't know, Forex Analytics right here. All right. If you're having an issue with PayPal, most people aren't. There's just a few people that are, and I need to. Milan said he is, and I knew about you, Milan. Actually, I saw that. The developers told me about that 2 days ago. So yeah, I know you for sure. And if there's anybody else out there, please let me know. Okay. Atakan says, and thank you, by the way. Atakan says PayPal's restricted in Turkey. I see. You can still use a credit card, by the way. Credit cards are accepted. It's just we're having this. There it looks like a couple of people, but all right. It seems like no one's really having issues here. That's good. And Milan, I'm still going to call about it today, and I'm having another issue with another person as well, but it doesn't. I thought it would be more people, but that's okay. That's all right. All right. Okay, thank you very much. Appreciate it, guys. All right, I'm going to get back to the analysis now. The developers asked me about it today, and so I had to make sure I mention it to you guys. Okay, let's go over to the euro. So the euro, um, we breached 110. That was like a given. I personally thought that the euro dollar was going to at least try to push stops below 110. Um, we didn't go too far though, frankly. I mean, if you look at the euro right now, we didn't go too far. Could we go farther? I mean, the euro doesn't look like it's ready to rally yet. I'll tell you that much. Um, the 786 retracement comes in right here at this support. So that is 109.70. That's the 786. Let's mark that down because if the euro does move lower, 1.0970, it should find some support there. I don't think it's great support, but it should. Now, let me remove this. Well, no, I'm going to actually leave that for now. Let's get rid of this because we never did rally. I was hoping we'd rally. Yeah, sorry. Apologies. Sorry about that. What I was telling you guys yesterday is I was hoping we'd rally up here because I wanted to short the euro up there, but we just continue to break lower. If we get a rally today in the euro, which seems, to me, it seems very likely that we're going to get a dollar pullback here. It actually seems like we're going to get a little bit of a dollar pullback, and maybe if we do, we might rally back to 110.50. Okay, but I don't know how much upside is going to be here in the euro. Still bearish, guys, and it's bearish while it's below 112, which is here I have to take the longer term view, right? As long as we're below this yellow trend line, this broken one here, as long as we're below that, okay, it remains bearish. So even any rally even up to 112, I mean, I would view any rally up into 112 as a great selling opportunity. Maybe not necessarily today, but if we got up there over the course of the next week, following the ECB meeting tomorrow, that would be an opportunity to short the euro, in my opinion. Do I hope we do that? Well, I've got some euro crosses long, like the euro Canadian, euro New Zealand, euro Aussie, so I'd be happy if that happened. And the euro, scooted back up towards 112 over the course of next week. I don't know if it's going to happen, but I wouldn't mind it. But I'm not, and I do have a short euro yen right now. So I'm a little hedged in the euro dollar at the moment, but I'm not really trading the euro US dollar. Not doing that right now. Let's take a look. Okay, got the euro down. Let's go over to the Swissy. All right, here's the Swissy. So the Swissy right back up to 99 cents. Now, look, this is that same Gartley that we've had up there. We're obviously challenging resistance right now. I'm not a big fan of buying Swiss francs. I'll buy yen all day, but Swiss francs ain't gonna do it. It's like against my my overall macro view of the world. I can't buy Swiss francs. Okay. The Swiss National Bank has, their constant, wow, by the way, I just wanted to say that oil's coming down, the Nikkei is coming down a little bit, S&P futures are coming down a bit. Anyway, their persistent, high negative interest rate that they impose on Swiss franc holdings right now, it's not conducive to holding Swiss francs long. Does that mean I want to be short Swiss francs, long the dollar Swiss? not at this very moment in time, but the trade that I ultimately want to be is long the dollar Swiss, not short the dollar Swiss. So, and right now, I don't want to buy anything, and I don't like to chase anything. And I'm not chasing. I sure as hell ain't. I mean, I'm not chasing prices higher. There's just no if and or buts about it. So the dollar Swiss right now, 99 cents is, obviously key resistance. Uh, Key resistance. Now support. I don't want to write down support all the way down here because we're going to obviously hit support way before then. I mean, 98.40. This is tight, but I'm going to write down 98.40 as being support. Because if that breaks, you might see a little bit of Swiss strength in the near term. If we do this, we might get a move that looks like that. Okay. And I'd be more inclined to buy the dollar Swiss on a dip back down here. I just don't want to buy it up here. And being long Swiss could be the best trade in the world. I mean, we could be sitting here, and next thing you know, we have like Italian banks are down like 8% across the board. Well, the Swiss franc is probably going to rally. And I'll tell you, I personally just don't want to do it. And Swiss francs, even let's just say I'm just going to use this as theoretical, and not saying it's going to happen, but let's say talks with Greece start to break down, and Greece says, what, screw it, we're out of the eurozone, and then then you start to see a somewhat quote unquote collapse in the European periphery, equities, the massive risk aversion hits the market. The dollar Swiss will fall. I mean, the dollar Swiss will fall probably pretty hard too. I mean, we would go from like 98 cents to probably 94, 93 cents really quick. But I would just be sitting here looking for a reason to buy it. Once the dust settles, I'd be looking to buy it. Anyway, so that's what I'm thinking. I don't want to buy it here. I'll buy it at some other price, some other level. All right, let's go into the dollar yen. Now, I am short the dollar yen. I shorted the dollar yen at 106.60. If you are asking me why, it should be fairly simple to understand. But we are up against a 618 here. We have channel resistance coming into play. We're at the top of an ascending wedge. I have 3 reasons, and then you can throw on top of that, you can throw a reversal candle about ready to post. I can give you 3, almost 4 reasons to be short the dollar yen right now. And then a 5th reason, if you think about it, if your stops are here, right? Your stops are here. That didn't turn out as well as I wanted. Hold on. Okay. If your stops are here, you're risking 70 pips. If you're looking for a gain of, let's say, here, maybe here, you're risking 70 pips to make 200, 250, 500, who knows? But the risk reward to be short the dollar yen right now is very favorable. Then on top of it, you throw in a trend line, you throw in this resistance, the spike high right there, you throw in the 618, you throw in the top of the trend line here on the ascending wedge, you throw the reversal candle right there. Look, I'm just giving you reason after reason after reason to be short. Now, am I or would you be guaranteed to make money right now? Hell no. I mean, you know, the equity markets could just start squeezing like it's nobody's business, and we could, you know, we could have that capitulation day where the stock market's up 8% intraday, squeezing everybody in the world. But any day of the week, I am willing to risk $1 to make $3 or $4, especially if it lines up with technicals. Nick says, regarding the yen, what about the potential bazooka, Blake? BOJ bazooka. Great. What about the BOJ bazooka? When's the BOJ meet, Nick? When's the BOJ meet? The 29th. That is 9 mother son of a Jesus days from now. 9 freaking days. You got 9 days to make hay. And do you not think that this move right here was in anticipation of the BOJ? We got 9 days to make hay. Let's make some hay, Nick. Thanks everybody for answers. But anyway, yeah, kid, earmuffs, kids, please. All right, anyway. But look, I could lose money here. You could lose money shorting it. Who cares? You're going to lose money in trades anyway. But I'd rather take a trade where I can stack the probabilities in my favor. And right now, they're stacked. Okay? Capiche? Good? Are we good? Good. All right. So resistance, I'm going to give it all the way up to 107. I don't know. We got previous support over here. I mean, look at all this crap too. This is just on a separate note. Look at all this, right? All that right there. We can get it all the way up to 107.20, really. I mean, we're in a range. Let's go into the dollar where support is, because really support, this is where, and by the way, just so you know, I'm not very aggressive short the dollar yen. You can't be. You can't be aggressive here, because it would be stupid for me to tell you that we haven't had a nice uptrend for the last 2 weeks, right? For the last 2 weeks, we've had a really nice uptrend. So it's right here where shit gets real. You know what I mean? That's where it gets real, right there. 106.10. That's where it gets real. That's where I start really pressing. Okay? All right, guys. Let's continue on. Oh, shoot. You know, I just realized what time it is. Is that time? I'll be back in a few minutes. Thank you very much. Don't go anywhere. I'll be back in a few moments. Thanks. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Sorry, it's making somebody laugh about my comments. Anyway, hey, guys, I don't mean to get heated, and I'll tell you. I'll tell you what. I love Nick's listening in, and Nick is one of the, Nick's a Nick's a Brit living. Nick, are you still in Italy, by the way? Nick? I'm not sure if he's still in Italy. Oh yeah, Nick's in Italy. Nick's a really great trader. He actually pulls up a lot of really good charts, and always gives great feedback. And I'm not, and Nick, I'm not harassing you or harping on you or anything like that. I was just trying to make a point. But you just happen to be in my wake when I was when I was making the point. But anyway, I always love comments from Nick because he's always thinking outside the box and always ahead of everybody else. So, but again, I just want to make the point with the dollar yen. Look, I don't care about the BOJ next week. I think a lot of this stuff has been bought in anticipation of, and that's the thing about the market. You buy the rumors, sell the news. There's a few things that I've learned in the markets that are so true. Okay, so true. Okay, let me give you just a couple right off the top of my head. Cut your losses quick. Let your winners run. One of the first things I ever heard stepping onto a trading floor. Now, I didn't hear this as a broker. I didn't hear it until, like 1996 when I first stepped onto the trading floor. Cut your losses quick, let your winners run. That's like a number one. You hear that. B, buy the rumor, sell the news. That is something that's been around for longer than my grandparents had been alive, in the markets. People buy the rumor, and then once it happens, they sell the news. The dollar yen is one of those situations, in my opinion, today. There's obviously a lot of other sayings out there that you could go and I can just regurgitate for you, but this isn't the time or the place for it. But I'm just saying that the dollar yen, I really think that this move that we've seen in the dollar yen, this is all anticipation of the BOJ moving. So really the risk at this point with the yen is the BOJ doesn't deliver, or what they deliver is just not adequate. The BOJ delivers some sort of new economic package, and it's a bazooka. They think it's a bazooka, and we end up getting a pea shooter, and next thing you know, the dollar yen drops to 100 yen really fast. I'm not saying that's going to happen. I'm just saying that is a risk. The markets always have anticipations. It's like if I was, I've never done online dating because by the time I got married, I'd already, we didn't have online dating. But it's kind of like you're online dating, and you see a woman or a man that they post a picture, and you go, oh, I have these, you're like, oh my God, they're so good looking, and you go meet them for their first date, and they actually posted a picture from like, I don't know, 10 years ago, and it's not the same. It doesn't look like the same person, and you go, oh, it deflates you. It's like, oh, well, that was no fun. It's the same type of thing. Expectations are now set at a certain level regarding. That probably wasn't a great analogy, but what the hell. The markets have a certain expectation of the BOJ, and they better be met. When you think Abe and you think BOJ and you think about what's been done over the last few years, the markets are expecting a lot, and so they've got to deliver, because if they don't, the yen is going to bounce like it's nobody's business. Okay, I'm going to continue on. Like I said, that was probably a really... Nick says I was really playing devil's advocate. I know you always do, Nick, and I appreciate that. I really do. All right, so here's the Canadian. Now, we got to watch the Canadian here. Obviously, as we get to the upper or lower ends of our triangles. Okay, whenever we're at the upper or lower end of a triangle, or in this apex here, this is going to break out, guys, and this breakout's coming. It's coming really soon. When I say really soon, it's coming within days or within the next week. Okay, and the greatest thing about this wedge here, I think we're going to make a lot of money. That's the best thing about it. I don't give a shit which way it goes. I don't care if it breaks higher, breaks lower. I don't care. It just, whichever way it goes, we're going to be able to make money. I just wanted to break out. So 131.40. Excuse me. Did I say crap again? Sorry, I didn't mean to. I'm a little heated this morning. 41. Okay. Resistance. Bam. Support. And it's all the way down here, but I'm not going to write that down today. I would say for today, support is going to be probably here. You can see it's a pretty high traffic area. You can see boom here, boom here. 129.85. It's going to be support. It's not great support, but you know, if we get back down there, I'm going to probably be a little bummed out. Like, you know, give all that back. Okay, we're in our range. We're going to be breaking out soon. Probably not today, unless crude oil just decides it wants to completely reverse. But yeah, I doubt we're going to be moving today. All right, here is the Kiwi. Yesterday, we were here. I said look for a rally to 70.75. We only went to 70, 60 something. So it didn't quite get to where I thought we were going to get. Tried, right? We gave it the old Marine Corps try, but yeah, it didn't quite make it. 70.70 is still good. 70.75. Support. 70.10. It's 127% extension. If we break that, if we break this, it's probably going to be pretty decent breakdown, in my opinion. By the way. We might be even trying to break down now. I mean, anyway, we break this. We should get down. What is that? What is this? What is this red line there for? Oh, yeah. If we break this here, that 120, we should challenge this support here pretty easily, right? Okay. Okay. I think we're moving back in the direction of the lower end of this trend, just so you all know. This channel. I think we're moving back down here. Okay, here's the Aussie. May not happen overnight. It's just, I think that's where we're going. All right, here's the Aussie, and the 618. Okay, drinking some of my coffee here. Still important. 74.45. Resistance is right here. 75.30. 74.45. 0.7530. This one's more of a range. The Aussie is right now. I think the Aussie. Just remember, we're in this triangle here, very similar to the Canadian. So one thing that I'm thinking, I'm going to think out loud here. You guys know I really want to buy the Aussie New Zealand again. When or if, I should give you the if, not necessarily when. But if we do this and we get down to 73, that right there is the point that if I'm not long the Aussie New Zealand, I will get long the Aussie New Zealand, just to let you guys know. Okay. Okay. Let's go over to the dollar index. By the way, this will be rectified today. I had the DAX bearish pattern in play. The flag pattern did not work out, so it got invalidated. Kind of bummed out. It's my first invalidation of Forex analytics, but that's all right. It's going to happen. I don't make money in every trade, that's for sure. All right, here's the dollar index. So the dollar index stalled. It's stalling pretty much where you would imagine, right? See this daily candle? That's if we close on our lows like that, that's a shooting star. So, or a gravestone doji, or whatever it's going to end up being today. But we have to be very careful if the dollar index closes on its lows today, because if it does, we can set up a pretty nasty reversal candle at what I consider pretty important. That's why it's so thick. That's why this is so thick. It's really important resistance. It's a 618 let's put that right there. It's a 618 retracement, previous support, and we're right there. Here, let's get rid of this for a second. And you know what? I might keep it there. So anyway, the highs today I think are very, 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 very good resistance. So what's the high today? Because if we break the highs, you're not going to be able to stop the dollar, my opinion. 97.32. So I'm going to write down 97.30. This is really good resistance. And I'm going to say it again. If the dollar breaks resistance today, you're not going to be able to stop it. It's going to be very tough to stop the dollar strength. Okay? We're in a range. Support, 96.80, the breakout point. All right, let's get over to the peso. The peso's probably come off of this resistance. It has. It's interesting, as the stock market has rallied pretty substantially overnight, it's interesting how the US dollar Mexican peso really didn't pull back much. I think that's very telling, if you ask me. Very, very telling. Because if the stock market comes down from where we're currently at, which, I think it could, this thing's going like this. Okay? If the stock market comes down from here, this thing's going to rip higher, aggressively, too. My opinion. All right. 1863.38, so I'm going to write down 1863 as resistance. Supports at 1834. I don't think there's a whole lot to do with it right now. I'm using it more as a gauge, or kind of helping me decide what I want to do in the currency market, and rather than trading it right now. I haven't found much opportunity in the dollar peso the last week. I was trading it pretty aggressively the last couple of weeks. I just haven't been this week. Last week, I just haven't done much with it. Here's the US dollar Norwegian krona. Okay. Notice we stopped at the 786 here. Bounced. Let me remove this. $8.48. I don't know if I really want to write that down as support. I really don't. I think this is support down here. $8.43, $8.55. 843, 855. Okay. Let's go take a look at the Swedish krona. We're making brief new highs. 618. That resistance is probably pretty important right here. 863. If you were a dollar bear, I think if you short the dollar Swiss with your stops right above here, that's a possible trade. I'm not doing it. I'm just saying that I think that would be your risk. Support will be back here at 851. So, like that. Okay. 851. Okay. All right. We're in a range. All right. There you guys go. Done.